Welcome to the TrustBridge Capital Market Observations Call. Today is Tuesday, January the 16th, 2024. I'm your host, Eric Jefferson. I trust everybody enjoyed a long weekend honoring the late Dr. Martin Luther King. With that, as we get back to business, a lot to talk about here. You saw a few quick disclosures from our legal team. With that, we can now dive right in. So here we are, 2 weeks trading into the new year. Been a busy time as we recently kicked off the earnings season. That's where every quarter, hear from corporate executives. They open up the books, show all the numbers as well. In keeping with tradition, that does start with a lot of the larger financial institutions, and thus far have generally been better than expected results. That is certainly going to be a key theme this year. As we talked about, we have a very high bar set with respect to earnings growth for U.S. stocks. That being said, so far so good. S&P was up just shy of 2% last week, bringing it now virtually flat on the year. Last week, we also heard from the Bank of America, a CEO who offered some encouraging thoughts with respect to the consumer, acknowledged the fact that they are slowing their spending habits. That being said, they are still relatively strong. That helps to support the thesis for a soft landing. We did hear from a handful of airline stocks. Mixed messages there. Obviously, Boeing has been in the headline for a lot of the wrong reasons with respect to some recent mechanical shortcomings. That being said, they have offered some subdued guidance. That is from a majority of the airline companies themselves. That is obviously a key theme when we think about consumer strength. Are they spending on those bigger ticket items? Certainly a way to try and gauge and forecast what future behavior may entail. That's certainly going to be another key theme as we talk about U.S. consumer makes up about 70% of the U.S. economy. If they're not confident, willing to go out and spend, that is going to certainly diminish a natural tailwind. In trading news, we saw Microsoft officially pass Apple as the largest company in the world. That's measured by market value, which is the stock price multiplied by the number of shares. Microsoft now worth $2.89 trillion. That exceeds Apple at $2.87 trillion. Apple down in early trading here as a function of some lower price targets in the Chinese market. A key headline or theme data point from last week, though, was the December CPI. That didn't necessarily deliver any big surprises. The headline measure ticked up modestly higher. That was slightly ahead of expectations. However, the core CPI, that excludes the more volatile food and energy, that came in right in line with what experts were forecasting. Now, that is still running at an annual rate just north of 3%. That certainly represents progress, but again, also represents a good bit of work to be done to get back to that target of 2%. That takeaway, if you will, suggests the economy is slowing. Prices are coming down. May not, in all likelihood, accelerate or speed up the Fed's decision to cut rates. That is something likely would have needed to see more progress on that core figure to give them confidence that we are continuing to trend in the right direction. Shifting gears to the geopolitical front, a lot of headlines here. We saw the Congress come together, unveiled a temporary spending bill that will help avert a government shutdown that otherwise would have taken place on Friday. That's now making its way to the Senate. All expectations for that to pass. Turning overseas in Taiwan, we saw an election that delivered an unprecedented third term for the current candidate. That was a clear snub to Beijing. They have come out, identified that party as a troublemaker, could certainly escalate tensions in the region. That would certainly be interesting if potentially an invasion, which many have speculated, came to fruition. That would now potentially be 3 U.S. allies engaged in military conflict. Obviously, difficult to speculate how that would play out, but initial thoughts, probably not a positive for risk assets. That also comes at a time where we have some escalating tensions in the Red Sea. We've heard a lot about these pirate attacks of cargo ships, as a result, seen a lot of companies adjust their routes. That does have an inflationary impact. Obviously, if cargo ships have to travel further, that's going to consume more energy, take more time. That comes at a higher cost, which certainly does not have a deflationary component to it. That being said, with respect to the elevated energy costs, that is probably less of an issue than in prior decades, based on the fact that the US now produces significantly more oil relative to what we would import previously. Finally, we have the World Economic Forum that is kicking off in Davos, Switzerland. Going to see a lot of CEOs, a lot of politicians come together, debate a handful of topics as we think about what ultimately the global economy could stand to improve upon. No major headlines there, but will be interesting to see what comes out a lot of those conversations, particularly in the current political landscape. That's all for this week. As always, I want to thank you for taking the time to join us. If you have any questions or anything we could explore in more detail, more than happy to. Have a great rest of the week. Take care.